Hopefully, we'll also understand when the prices of the very essential Nimbu is coming down.
I'm sure we will.
Well, good morning, everyone. Mr. Kamath, it's an absolute pleasure. I may add the word rare pleasure to have you. What should we start with, sir? I've got a hint to start with Nimbu prices. Would you like to start with tomato, pyaj, and something else?
Whatever you say, Nikunj.
Let's understand the construct of the economy. In the month of Jan, it appeared that we were in a swift recovery mode. Oil prices were under control. The fiscal deficit was looking strong. Corporate capex was looking decent. But now the world has taken a 180-degree turn. Is it time to get worried? And is a bullish person like you also slightly worried?
I'm not worried. I'll tell you why. I think 2-3 things are at play here. One, I think, is a change in mindset that has been that's clearly seen across India, and not just the companies, but the individual level. So you have a mind which is reset, is receptive to new things, receptive to technology, and across age groups. Typically, we said technology is where the 20-year-old mind or the 15-year-old mind plays. But today, you will see 60 and 70-year-old people perforce using technology. So that, I think, creates a whole lot of new opportunities. So that's going on. You would have seen what's been happening at the corporate front. After the second quarter, post the first lockdown, we could see EBITDA levels jump by 25%. And they have persisted over the last 7 or so quarters. I was just tracking yesterday the numbers of this last quarter for the companies which have declared numbers. That's probably not the full set of the large companies. But I'm seeing a 17% jump in EBITDA continuing. So at the corporate level, I think they are producing something heroic in terms of efficiencies and product, which augurs well for the economy and allows them, I would say, the muscle to withstand any shock. Yeah, there are external challenges, and we will see how these are handled, particularly in the context of inflation. But there again, if you see the policy stance of the central bank to hold interest rates, keep liquidity, I think adequate. I think it's fit for purpose policy over the last 2 years. And we will see how they will play out this somewhat of a jump in inflation. I will end this portion by saying that here again some new lessons have to be learned. All this while we heard economic scholars say that the moment there is inflation, interest rate is the only medicine. So I ask a simple question. What has happened to all that theory when in Europe you have 8.5% to 9% inflation and interest rates near zero? And yesterday I read somebody in the ECB saying, oh, probably we will have a hike in July. So what happens between April and July? No questions, no answers. The same thing in the US. You're talking of 8% or so, and today what, 2.5, 2.3, 2.75% interest rate. So vast gap between interest rate and inflation. So new economic theory is being written, and I think we will write this one out in a very interesting manner.
Mr. Kamath, history may not repeat itself, but it certainly rhymes. We are at the beginning of a new credit cycle. The last credit cycle was in a sense led by power, steel, and other commodity sectors. How will this credit cycle be different from the last credit cycle?
Yeah, I think there are 2 or 3 things that will be different. And let me put that in context. I would think overarching context is what the Honorable Finance Minister and the Honorable Prime Minister have articulated, that we're talking of a 25-year runway. That's very clear. All I have to do is see what had happened, say, in a country where I lived for 5 years, China, over the last 25 years in terms of infrastructure. And where are we? And the momentum we have, clearly I can see a 25% runway for infrastructure. Then we have heard 2 previous speakers talk about manufacturing and the competitiveness. Clearly, yes. And if there has been a quarter-on-quarter 25% jump in EBITDA, I think there is huge productivity gain that has happened in our manufacturing sector. So they are becoming globally competitive. And I think that they will find new energy to also go for the next 25 years. Why 25 years? Because that's when you traverse from, say, a 3 trillion economy to a 5 trillion economy to a 10 trillion economy. Probably not 25 years, probably next 10 to 15 years, you should get there. So momentum that, sort of momentum we have not had before. So the manufacturing sector, I think, will come back on its own and will invest just in time. That's another critical thing that has happened compared to, say, 10, 15, 20 years back, where it took 4 years to set up a project. Now you can do it in 1 year. And 15, 20 years back, you put 20% as your promoter's contribution, 80% came as debt. Today, your free cash flows are enough to set up the whole project, maybe some small borrowing at the margin. So the character of investment has changed. Investment will happen, so clearly manufacturing will be a driver. Infrastructure, long runway, but I would think at the moment it will look like government takes the lead, private sector plays a supporting role, because I think the challenges of the last 10 years, when a whole lot of things went wrong, I think have to be overcome. They are getting overcome, but they will be overcome. But till then, the government becomes the driver. And then there is the third cherry in terms of the whole, I would say, economic momentum, the digital economy. Now, what number you want to put to that is probably moot just now. I heard a number that we were coming to probably $1 trillion there. It will be wonderful. But my view is that if, say again, and I look at benchmark China, 35% of the economy is digital. Now, are we getting there? I'm reasonably sure we are getting there. Over what period? 1, 2, or 3 years? I think you will get there within that period, seeing the momentum that has happened in the last 2 years. And interestingly, that does not require funding from either the capital market or the banks. This is getting funded through PE money, as it were. So just to sum up, you have 3 drivers. Manufacturing, which is going to be self-financing, infrastructure, which will be financed from the market, as it were, and probably the lead will be with the government. And when I say infrastructure, I use water, I include water and the consequential impact on agriculture. And the digital economy, which will drive its own path, as it were. So I think we are going to have a very robust growth. And as we go on, I think we'll be pleasantly surprised with the employment numbers. I don't think we have as yet captured the full numbers that the digital economy, provide an opportunity to. It's much larger than what is articulated just now. I think in a year's time, everybody would analyze these numbers, and we will see that that's the next growth path.
So let me draw the big picture of the entire banking sector. PSU banks, some would argue that they were forced to consolidate, but consolidation has happened there. Private banks, HDFC Limited and HDFC Bank, big consolidation there. And then you've got the fintech piece, which in a sense has become very large. So as we move into the next credit cycle, as country becomes more digital, which piece of the banking stroke financial sector you're most excited about? I will not give you the answer of saying all 3, sir.
If we had this conversation 6 to 8 months back, Nikunj, I would have said the fintech piece, because they were coming on strong. They were doing things right. But somewhere I see that not just the fintech piece, the entire digitex piece, there is a challenge that is now very visible. And the challenge is, I put it as follows. It's a challenge between the value that has been created in each of these enterprises. Undoubtedly, enormous value has been created, which the incumbents probably, in a way, failed to do. So that has been created. And then there is a valuation expectation. So I think there is a discord between the value and the valuation. Now, when you move from the private market to the public market, and you are not able to show sustained growth, and ultimately sustained growth is bottom line, when you come to that market, you don't count eyeballs, you count the bottom line. For a very simple reason, because this investor is asking a tough question. Are you going to come back to me for money? If you are, I don't want to deal with you. And if you tell me that I don't know when I'll make money, I don't want to deal with you at all. So you have a situation where in this valuation discord, companies, digitech companies will have to understand what is their free cash flow, when is it that they will hit the free cash flow, and how are you going to be punished by the public market if you don't generate that. I hope they are not punished, I hope they are rewarded, but the moment you say, my burn continues, I need more money, and I'm going to come back to you, I think you're going to get a shock. So, connecting back to the incumbent players, not just in financial industry, but everywhere, unless these new cores, the new digital startups, are able to get their valuation expectations right, get their cash flow right, we have a lead time. And the events of, the reason I said 6 to 8 months is, the events of 6 to 8 months have shown that probably they have lost probably 2 to 3 years in having to regroup themselves and come back with the undoubted value they created for their products. In which period, I'm sure the incumbent players will also learn how to reinvent themselves, because they have seen a challenge come very, very close. So it's going to be a very interesting watch. 6 months back, I think the new course, the digitech, the fintechs had an upper hand. Today, I think the upper hand is with the incumbents, and we'll see a very interesting play. I don't want to call it a battle, market share, I would say, positioning in the next 3 years. And we'll know the answer then. But these players have created value, and I think they are going to be, in one form or other, continuing to stay in the market.
How do you see profitability for private banks moving? Because private banks, in a sense, have this USP of getting fee-based income, selling mutual funds, selling PMS, selling advisory, distribution, insurance. That end is now getting disrupted because of low fees model by fintech.
Yeah, again, the low fee model, the giveaway model, is it sustainable? I think a good example is the securities industry, where we had one competitor, pure play fintech, come and do very well, but had no debt or hardly any debt, and had a positive cash flow. Can all the other challengers say the same thing? Can all the aggregators say the same thing? So unless you come to a situation where they can say that we run a positive cash flow model, our valuation is therefore justified, I think incumbents have a time to regroup themselves. And that is what is happening. So I don't think the march is going to be as fast as we thought of. So, and at least I think in the securities business it has been thwarted. The next would have been mutual funds. There again, I think it is now going to be hard questions asked whether a challenger can run profitably. And then it would have been in, I would think, general insurance that is even more regulated. So as you go up the regulatory framework, I think the challenge is going to get more and more difficult. So while 8 months back I would have thought this is like an avalanche, I think today it's like a strong wind, and we'll have to see how it blows.
I have one tough question for you and one easy question for you. Which one you want me to ask you first?
You ask the tough question first.
I'll ask the easy one first,
Okay.
because I want to capture the smile on your face. And I want you to smile because this question will make you smile, I can guarantee that. I was reading in the morning that ICICI Bank price to book is higher than HDFC Bank. It's happened for the first time in 20 years. That should bring a smile on your face. Your hard work is now getting recognized.
No, that is not the smile on my face. My smile on the face is because I have an answer to that question that was asked to Sunil earlier about global scale. I don't think many of us know that we today have a bank which will have a combined market cap which puts it at probably the 7th or 8th most valuable bank in the world by market cap. That brings a smile to my face. So how we have achieved it is secondary, but that brings him, and that is aspiration, I think, for all the private banks and the government banks there, as to when do we get into the top 10 banks. And this I've been saying for a long time, since probably mid-2000s, when we saw 4 or 5 Chinese banks get to be in the top 10 banks in the world by market cap. Our turn will come, and our turn has come, and that brings a big smile to me. And indeed, I think all private sector banks are doing well, and I will celebrate their successes also, including ICICI. I'm undoubtedly proud about it. But today I'm, I think, proud about the banking sector in general for having made that break into the top 10. That has not happened in any other industry.
Why is that, sir? Why is that if I look at globally, the market caps of financials is not in top 5. There was a time when JP Morgan and Goldman Sachs, they were top of the heap in terms of market cap. Now that's been taken over by tech. Is that the migration for Indian financial sector as well?
Yeah, it's going to be a migration. The financial sector will remain there for quite some years, I would guess. But in India, if you see, despite the scale that has been built, again, Sunil gave an idea of the scale that has been built, I think there's a long way to go to create companies of a size with, let's say, even a 15, 20 multiple puts us in the top 10 in the world. Two reasons for that. One is the domestic market is still nascent. I think we remember that we are a 3 trillion economy, heading to a 5 trillion economy. And I would think that we will come into the top 10 as we probably traverse 7 to 10 trillion, because that will create the opportunity in the scale, A. B, I think we have not globalized any of our products as of now, where we can say that these are products with a global market, except for software, the historical legacy software that we were providing. But the big bucks and the scale will come in when we actually take to market the products that we have undoubtedly built here, and what we maybe lovingly call the India stack. So I ask a question, take one item out of that, the UPI. Cannot the UPI stack be taken global? I for sure think that it can be taken global. It can be scaled across Europe, because I don't see anything near it in Europe. I don't see anything near it in the US. Actually, across the North American sphere. I don't see anything near it in Africa. Maybe in South America, you've got bits and pieces. In the Far East, you got some bits and pieces. But you've got several geographies where this stack is open and could be scaled up. So I just gave that as an example, but there are several such things we can pick up and scale globally. And I'm sure somebody will now look at the fintechs or the digitechs and look at what is it that we could bring to market in a global context, of course in an Indian context. And that will give them the ability to be with the big players.
I just want to connect the audience here, Mr. Kamath. I guess some of the most underappreciated facts about India is that we've got Aadhaar, we've got a successful vaccine rollout. The fact that we are sitting here and talking is because of that successful vaccine rollout and the way, in a sense, things have progressed on the UPI front. Do you think India's stack or our preparedness in terms of the digital world as the India stack will be the biggest differentiator for us?
Absolutely, absolutely. And there, I think the role of the digitechs, including the fintechs, I think is signal, because they have made it possible. The new mindset was required, and they brought the mindset to bear. And that speed with which, for example, the COVID app was rolled out is not possible with conventional thinking and conventional, I would say, architecture that typically IT firms would use. So here, I think we see a new India at play, and that will make a difference. And that is what will lead us into the next century. And your underlying theme is democratic. I think the democratization of, say, India goes much beyond the political context. And put a simple thing in the context of what we were speaking just now, technology has become democratized. The device that sits in your pocket, we could not afford it, the mass could not afford it just a year and a half back. Can today afford it. If they afforded it, they could not afford the data costs. Today they can afford it. So I would think that these two great levelers, and then the whole ecosystem that has been built around it, I think makes it possible for something new to happen in a dramatic way. So I see the democratization not only in the political context, but in the usage of everything around us becoming the next growth driver.
Mr. Kamath, what is the future of mid-tier banks? Because they will suffer because of reach. They will have the challenges in terms of generating CASA and adaptation of technology. They will, in a sense, they will struggle. How do you see the mid-tier banking space moving, both for private and for PSU?
Yeah. The mid-tier banks will have to show a greater levels of agility, will have to embrace technology in a much would say, larger context much more quickly than what they might have been doing today. And probably there is an interesting path here where they could be the acquirers for some of the fintech startups that are coming. Not necessarily somebody with a great platform, but somebody with the right mindset, which provides you a layer within your own IT architecture or within your own IT department to do things which you aren't doing. So for them to be successful, I think they have to think like one of the digitech players, because if they try to imitate the big guys, I think that's a much bigger challenge, because for the big guys to change mindsets is going to be much more difficult than for the small guy and the mid-tier guy. So I see a great future for the mid-tier guys as long as they are willing to shed all issues that are there in their mind today and embrace new technology and new technology firms, maybe as partners, maybe as joining them and so on.
So the consolidation, what we've seen, let's say because of merger of HDFC and HDFC Bank, do you think that there is more such consolidation which will have to happen?
Yeah, that consolidation gives us scale as a nation. I think we, as I see, require at least 3 or 4 banks of that balance sheet size, particularly net worth, to actually drive the momentum towards 5 and then 10 trillion. So that will happen. Now, if you're talking of then digital players, I think have a wide range of opportunities through which they can grow, and that is virtually what they can dream of. Starting with the securities business, going on to core banking business within the regulatory ambit, what they are allowed to do with regulation, how they are allowed to structure and hold these companies within regulation. But they will need to think. Technology is available within the system, not necessarily with them, and they need to embrace it. The reason I'm saying, rather pushing this point is, for the incumbent large bank, embracing technology is a huge challenge. It is changing mindsets in your extant IT department is a vast challenge that you will have to struggle through.
My next question, Mr. Kamath, is about corporate ownership in banks. And you've been championing thoughts there, and you've been part of some committees. As India grows, there is going to be more and more corporate participation. What is the easy way out where corporate also get advantage for their investment and the sector also gets fresh capital?
Yeah, I think it's a very interesting question. I'll answer it in 2 parts. I think given the cleanup of the banking system that has taken place, and other day mentioned this, that we probably have a banking system that is so clean. I have not seen a banking system so clean in the last 50 years. So clearly speaking, you have a squeaky clean banking system, adequately capitalized. And for the current stage of growth, I think it has the ability to provide funding. It doesn't have the size as you jump from a 3 trillion to a 5 trillion to a 7 trillion economy. For that, you may need capital, but they continue to do well. That capital will certainly come in. So I would think that the banking system's capital needs will come in without too much of a challenge. The fintech firms will need to learn how to bulk up, because that is going to be a challenge. How do you meet bulk? And they may find a bigger problem in raising the sort of retail resources that you just mentioned, the CASA money and so on. But more critically there, I think it is a question of establishing trust. You can establish, and probably they have established their value in the technology platforms they run. Can you actually say that you have built the trust? I think a bit of a way to go. And I think, again, unfortunately, the last 6 to 8 months have not augured well in that trust context.
So this is 2022. I'm going to take the clock forward, 2025 and 2028, which is 3 years and 5 years. Hypothetically, if you're engaging in the same forum after 3 years, what is that one big trend you see in 3 years, and what is that one big trend you see in next 5 years?
Yeah, 2 things I can say. Where would the economy be? I think 3 years we will be nudging 5 trillion, and 7 to 8 years we should be nudging 7 to 8 trillion. That's my reasonable confidence. The economy will be significantly biased towards the digital side of it. Though, as I said, there's a 25-year runway for infrastructure. The digital runway will grow faster. And I would think that between that 3 and 8-year period, the digital economy should be 30-35% of the overall economy. But I would look at it in a very positive way, because the rest of the economy is also growing. 7-8%, near double digits. And then on top of that, you add a cherry, which is, say, 1/3 of what is from the conventional drivers. You're talking of an economy which is probably able to grow in double digits. So that's what I would truly see 7 to 8 years from now. In the midway, we are, I would say, accelerating to this position that I look at or envisage 8 years from now.
What could pour cold water on this assumption? Could it be oil? Could it be external shock?
I think not too many things. I think our ability to concentrate on the path forward and not be swayed by economic theory, which probably was relevant 100 years back. And that is clearly demonstrated by what the Reserve Bank did during the course of the pandemic. Against all odds, they kept interest rates where they were. Actually, they wound them down, kept liquidity flush, and kept to that. And we have come out of the challenges. And there's some innovative ways in terms of how to provide a helping hand, be it providing food support to the masses who could not afford that, be it providing support by way of a guarantee to that entire MSME sector that came in as a joint effort between the government and the Reserve Bank. I'm using these as examples of what is required to be steadfast in your what you are trying to do and not be swayed by history. Think of the future and think of what the future will. And even in terms of the oil price and this, if you look at today in India, if you look at the pace at which alternate energy is coming on, more importantly than the pace is the cost. Alternate energy is coming in at a cost virtually half that of fossil fuel. When I left India in 2015, alternate energy was twice or thrice as costly as fossil fuel. So I think we need to factor that in as to what is the next evolution here. And the next evolution here, somebody will say that, oh, but alternate energy is not 24/7, so what do you do? Very simply, I think in the next 3 to 4 years, storage systems, in one way or the other, whether it is batteries or whether it is hydrogen or whatever, is going to happen in a way which we probably don't see today. So I think we will write this one out without too much trouble.
So last but one question. ICICI Bank today is a market leader, one of the biggest balance sheet, market leader, insurance, securities and other businesses. Everything has gone as per what you'd planned in terms of giving it a scale and a size. But what is the one thing you don't like about ICICI Bank?
That was a difficult question? Or that was an easy question?
That was the easy one. Every customer has one thing or the other. Phone nahi utha rahe, call center nahi karte hain.
I will give an answer. I have to be more general in an answer than about ICICI Bank because that's my team still there. All my old friends are still there. No, I'll wider context. I think I would like every player, whether in the financial sector or in any other incumbent in any sector, to embrace change and what is happening to us, particularly in the digital context, much more openly. I am not seeing that happening across the Indian incumbent scene. And as I said earlier, we have suddenly got a 4-year lease of life. I think we should take full advantage of that. So that's my message to the larger Indian corporate, the large number of Indian corporates. But you got an opportunity, seize it now.
Mr. Vaidyanathan is here. So my last question to Mr. Kamath. As journalists, we are always curious. So we want to get the inside story. Mr. Vaidyanathan, I'm going to refer to you here. He was part of your team. Yes. So the day he told you that he wants to resign and start his entrepreneurial journey, what did you tell him?
I'll tell you what my colleagues tell me when they want to go. And all my colleagues are left in, I think, a good mood because I decided that whenever somebody wants to leave, you must go with a pat on your back. So Vaidyanathan came to me and he put it this way, I want a pat on the back. So I knew what he was asking. So you know what I told him? All right, get me your cash flow. I'm not kidding. I said, get me your cash flow, then you'll get the pat on the back. Vaidyanathan is an entrepreneur, like some of the entrepreneurs today. So he sends word after 7 days through my HR head, Mr. Ram.
He didn't call you before he called up HR.
No, he didn't call up HR. No, he came to me first. No, he had not gone to HR. He came to me asking for a pat on the back. So he tells me, so Ram comes back and says, you know, Vaidyanathan is feeling shy. He doesn't have the number work ready. So he still wants the pat on the back. So I said, ask him to come, I'll give you the pat on the back. I know he's an entrepreneur, and I'm always there if he needs some course correction to do it. And of course, he has done remarkably well, and I'm extremely proud of him. But he's a guy who came without a cash flow, and I still gave him a pat on the back.
So did he give you a pat on the back? Mr. Vaidyanathan, will tell us the inside story.
Of course, I gave him a pat on the back afterwards.
I can pass on the mic to you before we wrap. Did he give you a pat on the back?
Yeah, I think, can we pass the mic to Mr. Vaidyanathan, sitting right here in the first row?
See, it's about getting inside stories, right?
No, but since you ticked this off, let me just say that Mr. Kamath is the most generous person I have seen in my whole life. And he recites a story that I went with a plan. I went to meet him asking for a pat on the back. He said, come with a plan. I went back after 7 days, still no plan, but I said, I want to go. So he still said that, look, you know, you still have my good wishes. And after 2 or 3 years, it was quite a struggle, really a struggle, because I wasn't getting funding, I wasn't getting equity, I wasn't getting anything. I would meet him in that period, and he was generous enough to meet me even in that time. But closing comment I want to leave with you is that finally when I got an equity backing, this is important. Finally I got an equity backing. It was very hard because at that time, economy was going down and interest rates were going up. It was very terrible in 2010 to 13, if you remember. And when I met him, I told him, look, I got 800 crores from someone, and that's equity, and then we'll buy out the company. You know, I must tell you the incident, what he did. He got up, he took out his blue tie, he gifted it to me, and gave me a hug. I want to just say that.
That's a mark of a true mentor.
Ladies and gentlemen, I want to stand and wrap this session because that's the respect I have for Mr. Kamath. I would love to stand and just say that if a pantheon of great bankers in the world has to be made, and if there's one name which will always be on the pedestal, it would be Mr. KV Kamath. For what he's done to the Indian banking sector, I think he deserves a standing ovation here. Thank you very much, sir. It's a pleasure to really meet you.
Thank you, Nikunj.
As part of the conference. Thank you very much.
Thank you, Mr. Kamath and Nikunj, for that riveting conversation. Ladies